A very good morning to you. It is May the 1st. Welcome to Trade Live with IG with Rich McDonald and Piers Buckworth. Good morning to you, sir.
Good morning.
So basically, Piers, how do I describe you? He is an international man of mystery, a lovable rogue, ex-JP Morgan, ex-Bear Stearns, and basically the British version of Dan Ives, my tech expert that's been covering me for 10 years, and I must admit, he's right a lot more than I am, and that's why I've got him in this morning.
Great to be here, mate, and what an interesting time to be here, given everything that's just taken place in the last 24 hours alone.
It's huge. We've got so much to go through. Let's take a look at what's coming up on today's show. So the opening bell and fast market's going to be covered with me and Mr. Buckworth. Then 9:30 Andrew's with Jack Maguire. We got the all sessions opening bell. Might even talk Piers into sticking around for that. At 9 a.m. Then trade expectations with Chris Beecham and confirm and send myself and producer Phil coming in. So what we normally do now is go to overnight action, but it's so important, the macro yesterday, that let's go straight to the economic calendar and just have a look at what numbers we saw yesterday and how that dictated the day, because it was a huge change from when we saw the GDP number come out to when we saw
which was actually misreported
PC.
on a couple of media outlets as well.
So take us through it.
Yeah, so it was a fascinating day yesterday. I mean, macro stole the show to begin with. As I just said, we had the GDP number. So the initial reaction was a stagflation print. We had a lower GDP print, and we had a higher quarter-on-quarter inflation number.
Yeah.
Then the spending number kind of looked okay. Then we digested. Then about 15, and the markets, the futures started to sell off. The futures were already under a little bit of pressure anyway, because we'd ramped up and we were in anticipation of the earnings. But then the numbers were digested, and the month-on-month number was actually flat for the core PCE. So that was critical. So the number and the consumption number, so the consumer was strong. So it was kind of a nuanced macro data set. The bears jumped all over it and smashed the futures down.
Yeah. What was the low in the day in the Nasdaq?
Yeah, I mean, we were down 2.6% on the low, but it was fascinating because I was on the phone to clients at that moment, and I was just thinking, because the data was just coming in, and the Bloomberg chats were changing, and everyone was realizing the data wasn't as bad as initially thought. And then also, hang on a sec, we've got Meta and we've got Microsoft after hours. You might not want to be short into that. So then the covering started, and we're in a tape anyway. And what was fascinating, this has got to be mentioned, is that the day before yesterday, Trump came out when the tape was just grinding up into the highs, saying this is a Trump market. In other words, everyone's ignoring all the noise, and they just expect me to come out with a good outcome.
Yeah.
And then yesterday he tweeted, "This is when the market was down 2.5%. This is a Biden market. You've still got his economy." So I assume he's going to flip that back to it's a Trump market because we closed on the highs. But fascinating day. Macro stole the show, and then of course after market we got the big boys.
So let's put that into a chart there. Just have a look at the range.
Yeah.
Of the S&P 500, 5,440 up to 5,624 in 20 hours.
Yeah, I mean, and that's how intraday volatility is nothing unusual in the market we're in at the moment. It's extraordinary. It's quite fun for day trading, but as professional traders are having a bit of a mare because it's just not, it's not easy.
That's it. Well, let's. I tell you what. Let's go into overnight action now, and we will go through that. So this is exactly it. Piers, you've got a normal job as well as me dragging you in here, don't you? What is it
I
you
do?
for
Yeah, I'm currently working at a firm called Maycore Securities, part of Maycore Group, but doing what I've always done. Which has kind of morphed into sort of everything, macro and global equities, but U.S. equities and U.S. tech in particular is my focus.
Your wheelhouse.
It's my wheelhouse, and that's kind of just I've ended up there just because it's, as a broker, it's easier to talk to people about a tech, because it's a moving target every single day with so many different moving parts, and it's always interesting to talk about.
And the bull market has now been, a good 15 years.
Yes, and you and I have been debating it, for want of a better word, for almost that entire period of time.
Piers and I have had raging arguments. Me usually the bear, pretty much always.
Yeah.
If we're both bearish, then that is a real sign.
Yeah. If we agree on a bearish market, then
Yeah.
it's probably a good time to be selling it, I would imagine.
But we also, when we both agree on the bull side, then usually it's a good sign as well.
Yeah.
So please like and subscribe. If we've got new viewers on today that I've tuned in, especially to see Mr. Buckworth here, especially to hear the thoughts on Meta and Microsoft. If you don't subscribe at the moment, please do. Please like with the thumbs up at the bottom as well. But let's get started. Let's see who is in the house this morning. Boise is here. Good morning. Morning, Eric Jones. Producer Phil's coffee I have to get this morning. That's a nice day off yesterday, but yeah, I'm back to get the coffee. Anything to get out of it the other day. Waka Waka, personally it's stagflation. Then we run into hyper deflation, Waka Waka thinks. Piers is going to have a view on that. I know he is. Monkey Man eating humble pie. I did indeed. Steve Davies, into metals. Copper had a shocking day yesterday as well. We've got to cover that.
Yep.
Well,
we'll definitely talk about that one.
Yeah, and Andrew McKelvey as well. I must admit, Andrew, that was lucky. I did sell off Barclays on Monday, I think it was. Yeah, right, let's get into it. Meta, Microsoft, which one do you want to do first?
Yeah, well, let's just do them. I mean, let's do them as a pair. They morph into each other. So first and foremost, these guys are the pillars of the market. Last night was critical. I mean, whether it be sentiment, whether it be the sheer size of them in the index. But
yeah,
let's break that down. So Meta, we'll start with them. And by the way, if anyone ever says to me one more time that Snap's ad business is bad, that's a bad read for Meta, it's just every single time irrelevant.
You've got to ignore
It's a different ball game, right? Meta have got 3.4 billion users. If you take out under 13s and Chinese who aren't allowed to use it, they've got well and truly over half the people on this planet who can use their product. They have the eyeballs, so by that token, they're immune to a degree of economic downturns, and that's why I quite like to shift into that. So ads were fantastic. Even Reality Labs, which is obviously the drag for them, and they've moved away from that a little bit.
Metaverse.
Yeah, I mean they've pivoted very cleverly back towards AI and things that the market actually want them to be doing. So net clean beats on every single line, and most importantly, and I say most importantly because it just is so critical, the AI capex, which there's lots of opinions going into this. There was a semi-analysis report saying that Microsoft were going to cut their capex yet again, because it's obviously very well flagged and acknowledged by the company that they had already done that. But last night was critical. Meta, not only did they keep their capex guide, but they raised it again. Microsoft kept theirs. That is critical for the entire AI capex supply chain story, which is obviously that's the fourth pillar of this market in my view.
Well, let's have a quick look at how NVIDIA reacted as well, because I must admit that was the first one I jumped on. Yeah. I was looking for both comments on AI, and well, you can see my purchases there. Got 300 in, 9:30 last night. 111 is my lucky number anyway, of course, because it's my birthday.
That is correct, yeah.
And so about 113 NVIDIA finished, but it's a real positive sign from both on AI capex spend, wasn't it?
Yeah, exactly. I mean, and the reads have been, there's a lot of people who are trying to talk this down and say that it's been overdone, but if you look at this, every single read, I mean, we've got Google confirmed theirs, Microsoft have now confirmed theirs, Meta have raised theirs. If you look at whether it be all of the power providers and all of the supply chain, SMIC was an anomaly, but they're a smaller player. But the capex story is in place. We're going to hear from Amazon tonight, so we'll see what they've got a $100 billion target. We'll see what they actually say. It's been speculated they might slow that down a bit, but net, this story is front and center, and it's perfectly intact. So just to flip back to last night's earnings, Microsoft, again, cloud business for the big guys has been slowing down. Obviously, it's maturing, but they managed to. I mean, the intelligent cloud business grew at 33% versus 31% last night.
Because it was Azure that disappointed last time, wasn't it?
Correct, and that picked it up, and that picked up the slack again, back up above 20% growth, which is, this is not going to start skyrocketing again, but it was a very healthy sign for the core cloud business for Microsoft. Even 365 and PCs beat, right, which is the laggard part of their business.
Yeah, they're forgotten about.
Yeah, I mean, exactly right. So it's like Microsoft managed to smash it, and they raised their guide, which is extraordinary in this environment if you think about it, right? We've got the bears jumping all over this, saying we're going down to 4,200 in the S&P, and the earnings are a bit, and these guys just had every opportunity to at least give us a chink, give us an idea that was accurate. But last night was very strong for Microsoft. It's very hard to pick holes in any of the lines from either of those companies last night. That's
it. And if they were going to pull back, it was going to be now, wasn't it?
Yeah. So that leaves us. We can talk about this later in the show if you want, but I mean that leaves us with tonight, which is obviously going to be a different kettle of fish because Amazon and Apple are the tariff exposed names in Mag 7.
Exactly. So we're going to cover that about 8:10 this morning. We're going to look at European Open. Well, we're not going to look at the European Open because we just found out 5 minutes before we came on air, the two of us looked at each other and went, sugar.
Yeah.
Europe's closed today, isn't it? Of course, it is Labor Day in Europe, or International Workers' Day. So happy International Workers' Day to everybody protesting in France. Just a normal day there. And R6 Senna, good morning to you. We got a question already from Chimpanzee Chap for Piersey.
Yeah.
What do you think about NVIDIA's commitment to investing in the USA and being pushed into it by Mr. Trump?
Yeah, well, what a good question. And also, I mean, it's a great question, actually, because NVIDIA have been seen as a CapEx beneficiary for this entire story. We all know that. But during their conference, the GTC NVIDIA hosted conference a couple of months ago, Jensen Huang came on stage, and I don't know whether this got enough attention, but he essentially announced to the world that he's going to spend, not he's going to receive, he's going to spend $500 billion over the next 5 years.
In Europe,
a big number.
In US.
In the world of tech, on what he needs for tech, which by the way means one thing, TSMC. But all the other equipment guys. But the point is that his own CapEx commitment is enormous. And he's also very much in bed with Donald Trump and the Trump administration, right? And so this whole space is fascinating. Somehow Donald Trump has had a conversation with TSMC whereby he's convinced them to engage in a conversation with Intel. I mean, this is the number one player in foundry, engaging in a conversation, entertaining the idea of helping their weaker competitor, which would never happen in a normal world. I don't know what conversation is taking place. No one ever will.
Yeah.
But that migration of foundry and production capacity out of Taiwan into the US is already taking place. Taiwan have already committed a lot in Arizona. They've got another plant growing now. Intel are doing their thing. Global Foundries have moved back. They did a deal with UMC, another Taiwanese company, to move. So that's all very much in progress. NVIDIA are committed to that. And as far as I can see, nothing's going to really change there. When it comes to the foundry business, which is obviously Taiwanese.
That takes the risk of more tariffs on chips away, doesn't it?
Correct, Amundo. So, and that's exactly right. And that's why names like AMD, for example, who have zero, AMD do all their foundry through Global Foundries, which is in the US, by the way.
Okay.
So anyone who says, AMD's got huge tariff exposure, it just doesn't.
Right.
They sell chips into China, of course, the H20, but it's like 800 million of their entire revenue, which is nothing.
Yeah.
So to answer the question directly, NVIDIA are committed to the CapEx, and I think they're being friendly with this is the epicenter of the tech war. So I'd be very surprised if they don't continue down that road.
Waka Waka, my fellow bear, it's saying, don't be fooled by this quarter's results. But I do have a quote of the day just for you and I. If everyone's waiting for a pullback to buy, either the market doesn't have a pullback, or if it does, you shouldn't buy into it.
Yeah, I mean, again, that's just the way it works, right? But let's just quickly touch on this. So we're in a very extraordinary situation right now, right? I mean, I've been I'm on the show now, so we don't have the lead up and the history of what's been going over the last 3 or 4 weeks. But I've been expecting a rebound in tech, and particularly the software names to hold up because for the reasons we just discussed.
Yeah.
But we're still in an environment right now where the tariff implications. I mean, the trade between US and China has collapsed down to a point where something like 60% of the incoming ships have just stopped. So the clock is ticking for Trump to walk back and/or bring down these tariffs with China. As far as I'm concerned, the rest of the world is over there, and everyone's doing deals, and it'll kind of get itself worked out. If US and China don't come to some sort of agreement, which is a very tricky one, because ultimately it's US and China facing off against each other. Both of them have got different bits of leverage. This economic data, hard data, will continue to show pain, and we will have a problem. And the supply chains are seizing up, and that'll force up prices. And of course, that is the big elephant in the room, and that's where the stagflation and the bear argument comes in. I get it, and I see it, and I agree with it. But I think there's a window.
As of yet,
it's an unknown. So you've got Goldman is a great example of they're pushing to all the big hedge funds that they're going to get down to 4,200 in the S&P, and the world's ending. But the bottom line is that we don't know yet. My view is Trump has a small window within which to bring these tariffs down, get the supply chains working again. In the meantime, he's doing some other stuff on the side, which is potentially genius in terms of cutting income tax for like 70% of Americans.
But also, he's having a hand in Ukraine. So there's the deal has been signed. Even though they tried to backtrack at the very last minute, as the vice president of Ukraine was on her way into Washington, they tried to backtrack some stuff, but a deal was done.
I'm amazed because it was all about Crimea, and essentially that was part of the deal. And Zelensky had made it clear that he wouldn't give that up. So I'm quite amazed by it all. I mean, as important as it is, I'm not quite sure whether it has too much implication on the price action in the market there at the moment, but because it's kind of all just being put over to one side. I find it difficult to get my head around. I don't know how it's been agreed upon in the end. Well, I mean, the minerals deal is critical to it all, of course.
Because it's a reconstruction investment fund.
There we go.
It's not the US pillaging the natural resources of Ukraine.
Yes. Yeah. No, definitely not.
Definitely not that. It is a reconstruction investment fund. But what I did see was that the revenues generated in the first 10 years all go into the reconstruction of Ukraine, which, that's a good deal.
Yeah, I'm sure it's a good deal I'm sure it's mostly a good deal for Trump, but
yeah. Right. Okay, so we've got that. What else have we got on the morning this morning? Well, in the Times newspaper, there is a story that the Co-op has also been hit by this the cyber attack.
The Marks and Spencer's thing.
Marks and Spencer's, yeah. I mean, these are, what is it, Tesco or Aldi that's at it, is it, do you think?
Yeah, probably.
In the back rooms.
Well, but these cyber attacks, though, are becoming, I don't know whether anyone's noticed, I'm sure you have, that they're becoming thick and fast everywhere from all angles, which leads into this conversation that we'll probably have in a minute about these cybersecurity companies. I mean, if anyone can tell me how a cloud-based cybersecurity company is going to get impacted by anything from demand to tariffs, I'm all ears.
It's the demand should just be
so consistent.
Every single time there's a cyber attack. Funnily enough, sometimes they go down on it, don't they? Whereas this is...
Yeah, well, I mean, they've got some funny price action from time to time. But I mean, if you look at the secular bull story for the demand for cybersecurity, it's not going anywhere.
What's your favorite one?
So there's 3 names. I think the top 2, I think I'm going to boil it down to there's just 2 key names, which are pure cloud. Palo Alto Networks is the legacy player who have obviously got some hardware as well, but with the firewall. So it's CrowdStrike and it's Cloudflare for me.
Okay, let's have a look at CrowdStrike.
So bring up CrowdStrike.
Here we go. And I promise we will look at Rolls-Royce in a minute. We will look at Rolls-Royce.
What's the time frame on that?
So that is just a 3-hour chart. Let's look at daily. Oh, that's an interesting one, isn't it? So yeah, I mean, the daily just going, that's this year.
Got it. That's this year. I mean, it's been chopping around. Obviously, it's an expensive stock. It got caught up in the long duration risk off with all the other growth names. It's obviously volatility is this stock is no stranger to volatility. But the bottom line is that the bottom line is that the growth story here is not going away, and I would imagine the earnings are going to be good, which means we're probably looking at a new high in the not too distant future. But it does require the macro to be on side, and by that I mean we need the inflation data to continue to be friendly, because these long duration names do not enjoy inflation at all.
Yeah. Okay. Right, good. We're going to look at Rolls-Royce quickly. So a trading update there. Global tariff increases have created uncertainty. They expect to offset the impact of announced tariffs on business through the mitigating actions that they are taking. They're closely monitoring the potential indirect impact on economic growth and inflation. And actions taken give confidence for achieving the underlying operating profit of 2.7 to 2.9 billion. They note that they have had a strong start to the year and all divisions are performing well ahead of their AGM. So that's Rolls-Royce. We'll get opening
Defense
calls. Here we go. Right, opening calls are Lloyd's down 1%. Their pre-tax profit slightly lower than estimates, but the 25 guidance is confirmed. So Lloyd's down 1%. And Rolls-Royce market performer. Anything else you're seeing UK-wise?
Not UK really, because obviously that's the only one relevant in terms of what's open.
Persimmon up 3%.
Yeah. So that was kind of in line with the expectations, I think, Persimmon. I think Rolls-Royce is the only one that's interesting to me. I mean, Rolls-Royce is obviously... what a beautiful stock, and all about the defence, which is clearly the underlying core investment theme in Europe at the moment. But yeah, no, nothing else that really stands out in the UK today, mate.
Good. Right. Good morning to Kate Murphy joining us. Good morning to R6 Senna and Carl Anderson. Big shout out to you as well. So yeah, we've got. Let's go to a break now, and once we come back, we've got what could be in the future, sponsored by the London Stock Exchange opening bell with myself and Piers. Join us again in 2 minutes.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Was that a shiny new thing I just heard? Who did we bring that back for? That is a special. Is it a one-off? Who knows? Maturin, calling Maturin. There he is. Speculation is rife that the outage in Spain and Portugal were cyber attacks. Weathermen have been disparaging about this report that it was caused by atmospheric anomalies. Interesting.
Yeah.
Probably
I was just
pretend to be a weather expert now, wouldn't you?
No, I was just reading some of the comments from on there with regard to AMD and TSMC, and I thought perhaps it would be a good opportunity to respond to it, which was Global Foundries, who are a joint venture with AMD, obviously do the bulk of their chip manufacturing. TSMC do a little bit of it, of course. But
right.
My point earlier on, just to respond to that, was that the bulk of their exposure is in the US.
God.
And it's moving there.
Right, people.
Because TSMC are moving to the US.
Start trolling Piers.
Yeah.
Give him I've been waiting for this for years.
Yeah, it's going to be fun. I'm just going to.
Come on, trolls. Yes, there we go. Mature. No,
Oh
that's
God,
not
I've got to.
That's to this song, the shiny new thing.
Okay.
But before we start trolling Piers, we have to give a special shout out to his two beautiful children that are watching.
Oh, yeah.
So big shout out, Lotus. Mwah, kisses to you. 4 years old, she is an absolute princess, the most beautiful child I've ever seen. And also to Zayn, how are you? Zayn, going to be a bit of a boxer, isn't he?
Yeah. Big boy.
Sitting watching.
They'll be very happy about that, sitting at home watching this.
So yeah, so Dad going to say hello to them as well?
Yeah. Hey guys, I've got a picture from Mummy with you just staring at the screen, so I thought we should give you a bit of a shout out.
Good stuff. Right, we've got 4 minutes to the open. So let me take us through your thoughts on what the S&P 500 is going to do today and the Nasdaq.
Yeah. So I think today's. So I mean, we've broken out above that little very tight range that we were in for very good reason. And the problem is that the positioning has got somewhat less bearish. I mean, particularly in the options market. But sentiment overall and positioning going into sort of just full stop is incredibly negative. So it doesn't take much to move the needle. And we've seen this movie many times before. All right, once the bears step away, the machines take over, the technicals break out, and then you've got two beautiful fundamental reasons. It's very hard to keep the tape down. So I don't know whether Nasdaq futures are trading right at this moment.
Let's get a look at exactly what all the futures are giving us here before we get this London Open.
Yep.
So
there we go.
19827.
Okay, so tech. There we go. So it's a tiny bit off the highs, but and I say tiny, very tiny bit off the highs. Listen, I would expect this to be a standard day for this kind of situation. So we've ripped into the close, we've ripped again. We go into the US Open, we probably have a small pullback on the Open for 15 minutes or so, and then we grind higher, but then we pause because then the market's going to realize that we've got anticipation of tonight. And tonight's going to be more nuanced than last night, I would imagine, because Apple, the problem is that Apple, we know that Apple's phones are bad.
Hang on, we'll do that afterwards. I told you, don't mention Apple and Amazon yet.
Well, we can do that after.
Gold, we can talk about. Gold down 1.6% today. What's going on there?
Well, this is, oh God, I'm so glad you brought this up. I mean, gold has been the #1 momentum trade, and the reasons, and it's disconnected from many of its traditional variables, real interest rates and inflation expectations, and essentially been based on, in my view, purely on the US balance sheet. It's been the most popular and consistent trade. But if you saw 2 weeks ago, and I flagged this to my clients at the time, that this just got to the point where the RSI was 82 and it was over 2 standard deviations away from the mean. It was just absolutely and utterly overcooked. And then it doesn't take much to move the needle, because as soon as we get a little bit of risk on in the market and we get a little bit of a walk back in the tariffs, that reduces another reason. So gold is having a sell-off, which is much needed in my view, back to, and I mean, it's hard to tell. It could come back to 3,000, I think, quite easily.
I'll go 3,100. Right, Piers, grab your bell.
Yep.
Do you know how to ring it properly? this thing here.
Oh, yes.
Is the opening bell. When that clock gets to 8 a.m., you're going to ring that. But the best way I've seen is to get the pen inside and ring, because there isn't actually. Yeah.
I like
there
that.
we go.
Got it. Okay.
Yeah. Right. 3, 2, 1. Sponsored by the London Stock Exchange in the future.
There we go. Open market.
You never thought you'd be opening the London Stock Exchange, but did you?
Wow, that was emotional.
Right, we've a little bit of Scottish Mortgage Investment Trust. There we are, my baby, up 2.3%. Very happy to be having that one. Marks and Spencer's up 50 basis points. Piers, take us through the other winners of the day there at the top of the chart.
Yeah, so I mean, these are it's just. I think today's going to be almost a. I'm not quite sure whether the price action is going to have a hell of a lot of implication today, but I mean, none of those guys reported at the top, did they? No. I mean, it's. No, I mean, it's from what I can see, it's beyond the guys that have reported. It's going to be almost without Big Brother trading today.
So for our blind viewers,
Yeah.
run us through the moves and the names.
Scottish Mortgage Investment Trust up 2.36%. IHG Group 1.6. WPP 97 basis points. HSBC 96 basis points. Marks and Spencer 23. The only one that's red is Imperial Brands. Rolls-Royce is not on the list yet.
And on the downside,
The red ones. Yeah. Downside, we've got BP, who are obviously in the middle of a very complicated situation with
horrific, yeah.
Elliott. And then Lloyd's, we went through those numbers earlier, down 2%. Entain, fantastic company, had some pretty good numbers the other day, down 1%. Nothing to really take away there.
And after that, it's much of a muchness.
And then it's all much of a muchness. There's nothing particularly that stands out in the UK market this morning, beyond the ones that we discussed, of course.
Right, there's Rollers.
There she is at the top. So Rolls-Royce, without doubt, probably the best stock in the UK, and yet again showing why that is this morning.
Let's have a look at the chart there. This one's just been a beauty, hasn't it?
Yeah, I mean, this is insane. This looks like Rheinmetall. Funny that, they're both defense stocks, but it's, yeah. I mean, the thing is that in Europe is starved of exciting momentum growth companies and stories. It just is. And whenever, and liquidity. So whenever there is something, whether it be Novo Nordisk or LVMH or Rolls-Royce or Rheinmetall or whatever,
Vodafone.
Vodafone, whatever the flavor of the month is or the year, there's too much money chasing too few stocks. So they just have to, and the machines are involved as well. So these stocks just go and go and go and go and go. And until they don't go. I mean, LVMH would be, and Kering in the luxury space would be a great example of that. Yeah. In recent times, you know, they got to the point where you thought they could never go down ever again. And then look at them now. So, I mean, the defense story is very well owned and very well flagged and got a hell of a lot of fundamental support, but I'm not sure whether I love entering the position right here.
So I think, yeah, I mean, with Europe closed today, a lot of fund managers do take the day off, don't they? In the UK. So we're perhaps not going to see too much movement, really. Not great there for Shell and BP, is it?
No, well, oil's under pressure, right? In fact, that's one thing that Trump has definitely going for him.
Right, well, let's have a look at those commodities. So there you go.
There we go. So we're down another 83 basis points in the WTI. I mean, oil has been on a roller coaster ride, but, you know, there's a lot of things going on which are pretty negative for oil. There's a lot of supply. Trump's obviously, we know what he's doing. The Ukraine situation obviously reduces a bit of pressure on the supply side. And then, of course, you've got the fact that the Libyan situation. So ultimately, it's quite all kind of negative for all at the moment. And
big overhangs, isn't there?
There are some overhangs, and it's tough to say. I mean, the bears are trying to say that this is going down to 50. The other point that I was just trying to remember, whilst, as you can probably see just then, was the fact that the OPEC have just did a surprise and bigger than expected production increase 3 weeks ago, right at the moment when tariffs were kicking in. So that's why oil got slaughtered. But yeah, I mean, the oil universe is under pressure at the moment for sure.
Now, we do have our first troll on the chat. And it is the one, the only Mike Rogers.
Oh, God.
Mike Rogers is in the house, a mutual friend of ours.
That's hilarious.
He says, you are a sensational bell ringer, Piers.
Oh, thank you, mate. That's very kind.
Right, so with the relatively little excitement in Europe there, let's go on to Apple and Amazon. Go on, you've been waiting.
Oh, I have. Just find it so much more interesting, but... it's
which one do you want to look at first?
Let's look at Apple.
Right, here we go then.
So yeah, so tonight we have Apple, and it's going to be interesting. I mean, this stock has been under attack from all angles in the last a few months for obvious reasons. They're right smack bang in the middle of the tariff war. They've been flying plane loads of phones to India. They've now made an announcement last week that they're going to set up all of their production facilities in India, which is obviously going to be quite a significant commitment by them. And on top of that, the smartphone business in general is going through a cyclical weak time. So the services will be critical for them, as they always are. But the AI upgrade cycle for their new phone, the 16, which has essentially got AI features built in, which is a classic Apple, fantastic piece of equipment, which is basically going to put AI into the hand of everyone and make it incredibly helpful and keep it within their ecosystem. Can it be good enough for everyone to go out and buy a new iPhone? We'll see, but we're not going to have too much of a read on that tonight because we don't have sales of that product yet. But what we will do is we'll get an idea of China and their supply chain and how bad they think it's going to be. Because Tim Cook doesn't pull punches; he says it how it is. But my feeling is that it's all about positioning and expectations. Everyone's been very negative on Apple, and it's been reflected in the price action, the downgrades. And I don't expect tonight to be good to be particularly exciting on the upside. No. But if they can get through it,
is it the risk? Is Apple the one that could disappoint?
Yes, absolutely. Apple is the number one. But the question, that's the key word, is disappoint. Can it be bad? Yes. Is it going to be lower than expectations? I don't know.
So expectations might be already low enough.
My feeling is they're close to it. Yeah. I mean, my read in the market is that I don't know many people that are positive on Apple. And then that leads us into Amazon, who...
Well, I tell you what, let's do a very quick break and let's just see if we can get any of the research that is out this morning. And then we'll be back in 3 minutes' time and we're going to go through Amazon and any others that you want to mention as well.
Well, I think we need to talk about Qualcomm last night and Robinhood quickly. That was just from the number.
Yeah, of course, Robinhood, yeah.
That was just the numbers last night, and then a few other names I wouldn't mind mentioning, just which are in the household names, like Nike and Pfizer, etc. We can do that after the break.
Brilliant. And Eric Jones asking, which you've already mentioned, will everything leak 10 minutes before they close again potentially?
Yeah, well, we'll see. I mean, it'd be very surprising with these marquee names whether it got leaked, but it certainly felt like it, didn't it?
Yeah. Good. Right. We'll see you in 3.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Plug power, where's that going to open?
Right, we are back and ready. So, Pierre's just catching up on his portfolio. Talking of which, I have a quick look at, I must admit, I was pretty focused on those results yesterday, and I did pick up, if the guys just want to show it, I bought 30 Meta, about 572, they're now 578. Nvidia picked up 300 at 111.38. I think that could be 115 today.
Yeah, I mean, it's hard to not be buying Nvidia today. I mean, Nvidia's got some other question marks around it, but today it's going to be up. Listen,
one thing we haven't covered, sorry, and we will come on to Amazon. We haven't covered Tesla. Chart off there, thanks, guys.
Yeah, well, by the way, the news this morning on Tesla is pretty extraordinary. I mean,
Yeah.
classic Wall Street Journal, CNBC, they're constantly giving us false media reports. But the report that we woke up this morning to was that they're looking for a new CEO at Tesla, which obviously would have been earth-shattering. The stock probably would have gone down 20%. Because it's literally trading on the CEO right now.
Yeah. Denied straight away.
Then denied immediately. Yeah. So interesting, but just annoying. It's just every day there's some major headline that's just either nonsense or we don't know whether it's nonsense. Tricky.
And I think it was they considered looking for a replacement when Musk was at his worst of Doge.
Possibly, yeah. I mean, it's probably some truth or some sort of foundation to the story, but who knows? I mean. But one thing I do know is that if Musk leaves Tesla, regardless of his behavior or regardless of anything, the stock will be going down.
But yeah, I mean, that's his life, isn't it?
It's everything. The stock is, the Musk premium in that company is alive and well, which we've seen literally in the last 2 weeks.
Amazon.
Yeah. So again, there's a lot of people that think that they're talking down Amazon tonight, right? For obvious reasons. They're in the middle of the retail. You know, we saw what Temu did the other day, and they're raising their prices by 100%. There's been a whole bunch of back and forth on the tape about 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 Amazon's potential supply chain and price hikes and et cetera, et cetera. So we're going to hear about that tonight. We're going to find out what the retail business is like. I would imagine that the margins in the retail business. But the thing is the consumer is on fire.
Yeah.
And so I just wouldn't be surprised. And AWS has been outperforming Azure consistently for 4 quarters in a row. We just saw what Azure did. So either that momentum shifts and suddenly AWS has a quarter where they underperform them, or they just beat and then the retail business is also okay and they're up 5% and everyone's like, oh God, okay, here we go. I think there's going to be some more nuance to it because they have to acknowledge the supply chains on the conference call. I mean, we can't get around that.
No.
But it's Amazon, and they're a juggernaut, and they're 50-50 between the most profitable growth engine in their business, the AWS, and the retail business, which is up and down on a quarterly basis. So I don't have a very strong view. All I know is that it's not going to be a disaster. Well, I don't know that. That's what I would be surprised if it's a disaster. And if it's not, the growth engines of this market are no longer Apple and the supply chain. They're software and AI capex and the supply chain. And we've got Amazon to go, $100 billion target for capex. If that comes down a little bit, will it matter too much? Not really, because Oracle's ramping theirs. We just heard Meta's ramping theirs. So I can't see how that. I think with the bulk of what needs to be done is done. If they both have a disaster tonight, we might have a problem.
Yeah, that would be a real interesting one because it's not often you see. They always go double on the 2 nights, don't they? But you don't normally see a double positive and then double negative.
Yeah, it's very unlikely. And also, these guys are experts. They're best companies in the world. They know how to guide. They know how to manage their margins. And how often do these companies give us a disastrous quarter? How often? It just doesn't happen very often. If it's going to happen, but the conference calls will be critical, right? Because these guys, unlike last night, have genuine concerns on supply chains.
True.
So let's hear what they've got to say.
Yeah. So you would potentially be less confident being long NASDAQ going into tonight than you were last night.
Last night, well, yesterday is an intraday thing. The buying the market when it was down 2.6% into those numbers was kind of a layup trade, because who's going to continue shorting it, right? Into those numbers. Like, even if you're really bearish, you're not going to do that.
Agreed.
So, but then after market, and then today's, when you saw those numbers, another kind of semi layup trade was the X 50 basis points. But then tonight, I mean, those with with the guts can hold on to it, and probably could end up a lot higher. But I would prefer to sit this one out.
Yeah.
Because let's not forget, we're still in the most uncertain, extraordinary macro environment that I think we've ever been in the history of markets. Because given the sheer complexity of it, and there's a chance that these guys say something in the call. So I prefer to sit it out tonight.
Yeah. Agreed. Good advice. That's not advice, of course.
No.
Right, going back to the chat. So yes, Maturin, we are trying, believe me. But yeah, it's convincing people that you lot aren't going to go wild on a Discord chat is quite the job. So we're almost there, though. Almost there, we think. And Hood. That's right. Sweeping
Robinhood.
L and H wants to talk about Sweeping L and H. I don't think I've seen that name on the chat. That's
Sorry, which one?
one of your buddies, is it? But yeah, talk about the Hood.
Robinhood. So again, this is a very interesting story. I mean, when these guys IPO'd, it collapsed, and it looked like they weren't going to turn a profit at any point. So the CEO has become a key feature on Wall Street, and he's turned the company profitable, and obviously they are a crypto proxy. So 2024 was a big year for them.
Yeah.
Revenue growth year on year was 130% last quarter.
Look at that.
Which was
Sharp. Beautiful.
So I mean, and that chart, if you take it back to before the sell-off, right? So we got the consistent upside through the year as the crypto story developed, and then the obligatory beat and melt up into, and then of course we saw the growth and high beta sell-off, which coincided with that. So down we go. Numbers were pretty much as they should be. The growth rate has come down by 30% quarter on quarter in the crypto revenue.
What does this stock really trade on now?
Crypto revenues. I mean,
Should it trade on? Let's say Bitcoin dropped 20% in the next month.
well, it depends on.
Does that mean this should go down?
Well, not necessarily, because obviously these guys make money out of the volume, not the direction. So
Yeah.
If you listen to the comments from Vlad last night, he said that, I mean, but in general, when it's a bearish market, there's less volume. That's just the way it works.
Yeah. So a bull market.
When everyone's excited, because it's retail, right? So when it's going up, retail are like just bah, 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 bah. When it's going down, everyone's like, and it's more. It's usually so
we
it's
might have to get that bit cut out and published.
yeah.
Your impressions.
But it's not. It's not. So in general, volumes do decline in a more bearish market for the crypto space. But it's 100% growth in crypto revenue year on year, which is pretty solid. And if you look at the revenues, they're growing at 50%. EPS is growing at 106%, 37 cents a share EPS. So
Let's have a look at the old tip ranks here and see 13 buys, 6 holds, 0 sells, and we're talking.
yeah,
Who's a good name in this world? We've got Morgan Stanley, don't like it. Barclays don't like it. Bank of America do. Deutsche Bank like it. Yeah, tricky one, but 25% upside on the analyst price target.
yeah. I mean, my view is that this. It's very difficult to value these stocks at the best of times, right? And their momentum and their retail. So it got overcooked for sure, 2024, and it needs to go through a consolidation period. Is the story over? Absolutely not. Will it depend on crypto volumes and crypto bullishness? Yes, I think it will. They're desperately trying to diversify the business. They've diversified already into banking with the banking license and the neobank category, but Vlad made it clear last night in the call that he doesn't like their sensitivity to crypto volumes as much as he'd like. So he'd like to continue to diversify.
Right, on the channel, should people like and subscribe Piers Buckworth?
Yeah, that would be good.
Send them a message.
Yeah, I think that if you are watching today, particularly I've got a whole bunch of people who keep messaging me extraordinary stuff. Please, if you do like this show, please subscribe, because we're trying to build, sitting here talking about markets in a candid way is fun and hopefully helpful. So please subscribe.
I've heard Steve Sedgwick's tuned in.
Oh God, really?
Not this morning. He doesn't want to see you. Right. Do banks not like Robinhood because they are stealing their business? Asked Monkey Man.
Yeah, good question. I referred to a neobank a minute ago, and for those who aren't familiar with that term, it's essentially a digital bank. SoFi Technologies is probably the best example in the US. They basically everything's run through an online wallet, and you can deposit, you can trade crypto, you can do the whole lot. Block do it, Square, Robinhood do it, SoFi do it, and a whole bunch of other people do it. Revolut, obviously in the UK, are probably a great example. Are the banks concerned about that? I mean, yeah, it certainly takes their business away, their deposit business away on the margin for sure. I'm not sure whether it's having too much of an impact overall, but yeah, I'm sure they don't like that. This is a trend which is growing for sure.
Right, let's play a game.
Yeah.
What is the biggest bull in the world? What is he bearish of? What's your favorite?
I'm not
shorts?
always the biggest bull in the world, just only when it's,
biggest fool of bull in the world.
I tell you why I lean bullish most of the time. Is because there was something in 2009 that was invented called quantitative easing and unconventional monetary policy, prior to which there was none of these tools in the toolkit of the central banks, which means that the worse it gets, the better it gets.
Yeah.
And how many examples do you want? I mean, COVID, you name it. It's every time, and the only thing that can stop that is inflation, right? Inflation takes away all the power of the central banks to fix the problem, and that inflation is the answer to your question. That's what worries me. That's what makes me bearish. If we have inflation, 2022, for example, right? We entered 2022 with the pivot from November 21, the pivot from the central bank saying that they were going to raise rates, and the rest is history, right? And for as long as the inflation was a problem, the market was in serious trouble, led by tech and growth and duration. So that's what worries me. And quite frankly, at the moment, I am a little bit concerned, right? I didn't quite get a chance to finish what I was saying earlier on, but we have a small window here. Loads of the elements of inflation are coming down.
Yeah.
If you look at lots of the different components of inflation, Trump says we don't have inflation, which is one of his classic sort of outlandish comments. And partly that's true, but the supply chain stuff is a problem, right? And so for as long as he has tariffs where they are, we have a potential inflation problem. And if he's going to start cutting taxes for everyone and boosting the economy, we do have a potential inflation problem. That is what would worry me. So if inflation stays down, I don't really care if growth comes off.
Oil's really helping that, isn't it?
It's helping enormously. And look at it again today. I mean, that's a big win for Trump because he desperately wants it lower and he's got it lower. The one thing that he hasn't got lower, that he desperately wants lower, is rates. And it's anyone's guess as to why he's still pushing the envelope and getting the US dollar down. But all of this stuff is he's trying to force money into treasuries. And who knows what his underlying agendas are, but there's some big things at work here. Yeah. But let's not make any mistake. He wants rates down and he wants oil down and he probably wants the dollar down as well a bit.
Now, I tell you one thing about coming on television, Piers Buckworth. We have a very loyal base of viewers here.
Oh yeah, here we go.
And they do hold you to account.
Yeah, no, fair enough.
You came on here rambling about Plug Power the other day.
Yep. Yeah, I know, fair enough. You need to be called out. So Plug Power, which I bought after when I got back to the desk after the show, it was up about 5% after having been up about 15 pre-market. Listen, let me just address this head on. They have essentially filled the gap back down to where they were. Now, the reason why I like this stock down here as a trade is because they no longer are going out of business. They've just been given a lot. Their balance sheet has now been had the hole plugged in it. Their cash flow has improved. They're building new factories in and around the United States. They have contracts with some of the best companies in the world. The short interest is 29%.
Wow.
It is absolutely begging for a short squeeze. And I had it's 15% lower than when we spoke about it on the show the other day. So far it's been absolutely shocking.
See, but it does come with big risk warnings.
It's a risk. This is a very high risk trade. It's a stock which we probably shouldn't be talking about, but it's one that I know very well. And I just know that a 15% move in plug is absolutely nothing. Right?
Yeah,
this stock has got the potential to be up 200 or 300% over in a heartbeat. Yeah. So it's worth just keeping in context what the stock we're talking about. This is not a blue chip. This is a highly volatile situation.
But with Microsoft up 7%, with Meta up 5%, then there certainly are easier stocks out there to make money on at the moment. And the Nasdaq up 1.6% now on the day.
On the highs, is it now?
It's going to be a real interesting day out there. Thank you for coming in, sir.
Yeah, thank you
very much. Anything else you want to finish with?
No, I mean, I think we didn't talk about Qualcomm, but Qualcomm is who reported last night. They're obviously their guide was lower because it's smartphones, right? So they are potentially a read on Apple. Quovo, who reported the day before, 45% of their sales are to Apple. Their numbers were actually quite good. So going into Apple tonight, the reads have been mixed, so it's hard to tell. But I think that we've beyond that, I think we've covered everything that really matters at the moment, mate.
Excellent. Thank you very much, sir.
Thank you.
I will go and buy you a coffee now. I've got to buy producer Phil a coffee as well, so be using up all my my loyalty stamps. Luke Moore saying, fantastic show, peers. Welcome to the team.
Wonderful. Thank you for the opportunity.
Join Angeline and Jack after the break. Give us that like and subscribe before you go off and make your cup of tea there.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favorite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Hey, welcome to Live from the Trade Desk with myself and Jack Maguire. Trader friends, good morning. Good morning. Lots of new faces today as well joining the chat, especially from the Antipodes. Hello there. Jack, how are you? How's it going?
Yeah, I'm not bad today. I think
I'd rather be European.
outside.
Can I say that today?
Yeah.
I'd rather be European. You know, they've got the day off.
Yeah, day off, and if the weather's anything like it is in London,
I heard
they must
it
be having a
is.
great time. It's absolutely scorching. We've got a window right next to our desk, so it's just teasing you the whole day that you sat inside.
Is that why Elliot Harris isn't in today?
It might be right, actually. If he's working from the garden later, I'll be very good.
Nice, nice. Well, if it's anything like yesterday, it was amazing. And speaking of that, let's have a look at the markets and also volatility because, you know, we are seeing, this interesting thing here emerging in terms of sentiment and also taking a look at my chart there and position. We saw the squeeze earlier this week. And then there's this feeling that, the bears had stepped away, at least for now. And then the bulls were coming back in, and we did see, of course, that rip higher with Meta and Microsoft overnight. Tell us what this has done to volatility.
Well, I was thinking of points or talking points for the show earlier in the week, and it seemed like volatility come back down. It's not spiked up to crazy high levels, but we've started to come a little bit higher, I'd say. Today, we've obviously got Europe offline, so the little bit of a as you'd expect, volatility might see a little bit of a dip in the morning, but it's not really showing. We've still got decent levels in there, and it's similar across most of the contracts for the different expiries that we're seeing.
Yeah.
Yesterday we saw a bit of a spike up after the GDP figure, but then that rally was just incredible. The last sort of 10 minutes of the session, and then even overnight slightly.
Yeah, and interesting that yesterday we saw this, on the daily chart here, this shooting star-like formation, but actually it isn't actually. A shooting star needs to be on an uptrend, but nevertheless we saw that it opened high, and then we can sustain that, and it closed down at that level. Seeing that green now, let's have a look at the options market there. Having a look at, of course, let's have a look at the US 500 first. Let's have a look at the expiry for the 5th of May and then roll back from there. I mean, we're kind of looking like where we were perhaps earlier this week as well.
Yeah, sort of low 20s. You probably expect that at the moment. It's a little bit away to some dead time over the weekend. But it's actually interesting you bring that up the Monday there, because it's worth comparing it to some of the other contracts. It gives you a clue of what's driving volatility and which sessions are going to be the most anticipated.
Yeah.
So comparing it to, say, the Friday going off tomorrow, the volatility on there is a lot higher. You'd expect it with the time value, but also we've got figures coming out. There's non-farm payrolls, which I guess we'll touch on later. But it's interesting to see that that's driving quite a lot of the short-term volatility there.
Yeah.
And Monday doesn't seem, that's not too high at the moment. I think it will, definitely will rise higher, but don't think you can get too much of a change for Monday.
Interestingly enough, the non-farm payrolls number, I mean, in a week with so many earnings, it almost seems like an afterthought.
Yeah, it's, in fact, I was thinking the last non-farm payrolls we had at the start of April, I don't know if anyone actually read the number until later in the day.
Yeah.
That was the Friday where things were absolutely
Kicking off.
crashing.
Yeah.
Yeah. So don't know. It's a everyone. I feel like it's a well thought of number. The Fed will definitely be looking at it, so it's going to play a key role. But yeah, sometimes gets downplayed. It's a bit weird, but it's definitely driving S&P vol.
Yeah, definitely. I mean, in a week as well, when we've got all these mega cap earnings, not really a surprise there. But if we get a really crazy figure, we might see vol spike back up again. Trader friends, those of you that are trading that figure, expectation there is for the U.S. economy to add approximately 175,000 jobs. Unemployment rate expected to hold at that 3.9% figures after 151K increase in March, which was, if you remember, below expectations. Also, the other thing that we've had lots of clever comments this morning coming across the board here on the YouTube chat. Waka waka. Jack saying we're in a bear market. What we saw last night, I guess in response to Meta and also Microsoft and the whole euphoria that we saw overnight, was a bear market rally. What is your view, Jack?
I think there's quite a good argument for it. The outlook's not especially great. I think most people are thinking probably negatively when it comes to it. I was trying to look at the long-term chart. I don't know if you have that on your side, just of the S&P, and you can see
Let's
typical
go out to,
sort of
where do you
trend.
want to go out to the 30th of May?
If you go, oh no, go even further than that. So
20th of June?
I think if you go on a daily chart, and then you should be able to sort of scroll it out, and you can see even back sort of a couple of years. And it does look like when you bring that trend up, we've obviously entered the period of us trending lower. I think you expect that to continue, but it's so riveted on news at the moment that I don't know whether it's a genuine sort of, I think it could be broken basically with any good news.
Right.
So I don't know if we're stuck in that trend. I think we're very much like the Fed, data focused at the moment and story focused.
And is this largely because of tariffs and all that uncertainty that's looming?
Yeah. Well, I mentioned it last time I came on. The sort of range of possibilities over the next year are so wide that I don't think there's too many people out there who can correctly predict what's going to happen. There's a scenario where sort of tariffs don't get implemented, lots of deals are made, that's so positive for trade and completely negates the outlook that people have at the moment, where it looks like trade war between America and all of their trading partners. So there's so many different possibilities that I don't think you can really predict it. And I think the uncertainty is probably driving us lower at the moment.
Yeah, and we all know as well, we've seen that the US has signed this natural resources deal with Ukraine, after a lot of toing and froing. Interesting to note that the wording itself was mutual assets, talents, and capabilities. So the deal will see them work on mutual assets, talents, and capabilities that can accelerate Kiev's recovery. But they didn't say a huge amount of what exactly. I mean, we're still waiting on the finer details. The initial deal, of course, fell through earlier in the year. And so we saw a lot of volatility there as well. This looking like a done deal, or do you think there could be some more sort of surprises lurking?
I mean, with Trump, there's always surprises lurking. I think we could see further negotiations. You'd expect that this is a concrete deal that will probably get added onto. I don't think both sides are going to back out of this. But it's just a never-ending story. And obviously, with how tied it is to the peace negotiations, you'd expect that both sides are probably going to try and use it as leverage against each other. So I'd be interested to see what they come up with. and if anything's added to the deal. And also if Ukraine can gain any sort of upper hand in it, because it feels quite American dominated at the moment.
Yeah. And I completely agree with Piers earlier on. He was saying that, the main thing, if you had to filter it down, is actually what happens between, Trump and China. Everything that happens outside, in terms of tariffs and deals, that's just kind of, when the real deal is, of course, China, and whether or not we see a rollback in the tariffs on Chinese imports, because we see a rolling forward. Just taking a look at the US 500, lots of chats coming through, bigger beers. Saying today is the 1st of May. Thank you so much for reminding us there, because boy, it's been an exciting first half. I feel like, tell me if you feel like it's been longer than usual, because it has for me, covering the markets. Pivot for the month, 5,397, 5,397 on the futures. Taking a look at here, I agree with you. I think we could still see a correction there, or a retracement, as Axel likes to say. Even though we are in the early signs of breakout into an uptrend there. 5950, that yellow line is kind of, after checking out Richard's projections, those of you that watched his TikTok and how to calculate your projections for the US 500 by year end, I thought tariffs will start to affect the S&P, and so my figure with that in mind is 5950, that yellow line there by year end. But before we get there, I am expecting a lot of falls and what I call the double avocado. So the double avocado is by the second dip. So if you see a huge spike down or any sort of downward reaction to tariffs, this tends to be a second dip. So buy the second dip if you are wanting to eventually go long on the S&P. Taking a look at some of the other news as well, we are waiting on more reaction from the rest of the market. Jack, do you like your cars? Do you do a lot of online shopping?
Yeah, bit of an online shopper. I've a bit typical London, gone back to second-hand clothes now.
Oh, you part of the Vinted gang.
Yeah. Don't buy a lot from it, but I see that and compare it to a sort of brand new t-shirt that just has a logo on it and it costs £60. I can't bring myself to buy it anymore. I feel like it's the best thing ever.
You have to show me this Vinted. I've never used it. And I am not great at going to shops, so I really like the whole retail thing. So you have to show me Vinted. Trader friends, the reason why I'm asking Jack this is because, of course, we've had loads and loads of companies, including retail, coming out and saying, we can't hold off anymore on these tariff costs. We're going to have to start passing them through. We have seen lots of major companies saying this, one of them being Amazon. You saw the reports earlier this week with the kerfuffle with the White House. Also, I think Intel CFO saying that, they will start seeing the tariff impact, warning of this to come. You kind of expecting all of this, Jack, to start impacting volatility and I guess our pockets quite soon?
Yeah, I think so. We're waiting for the announcements, basically. That 90-day pause came in and it relaxed everything down. But at the end of the day, it was a pause. There's still tariffs that are going ahead. China and the US still in a trade war. I know there's been talk of a de-escalation, but has there been anything in principle yet? I don't think so. It takes one of them to act first. And from a standpoint, it looks like China believe America started the trade war, so they need to back down first, and America won't back down on China because they think this trade war was a reaction to Chinese trade policy over years. So until we get any movement on that, until we get negotiations going ahead, there's obviously the UK trade deal, there's multiple other trade deals, and then even touching on, say, the Canadian election, where Mark Carney essentially wins on an anti-Trump campaign. It's the outlook of the world probably going to change quite a lot. And once that pause comes back around and we're facing tariffs again, I think the volatility is just going to rise straight up. It doesn't look like much has been done in time that we've had already to mitigate that, I don't think.
Yeah. Not a lot has been done. That's absolutely right. And in the meantime, we've seen this move slowly higher on the US indices. However, we did have that GDP number yesterday. I mean, we did have an impressive recovery, right, on markets on Wednesday for US markets. After initially falling after that GDP number, which was weaker than expected. So trader friends, those of you that were trading this, it was a very exciting session there because there was so much going on after that GDP number. Everyone switched, took off the macro cap, put on the earnings cap. But what were you seeing on your end on the desk there? Was it busy during that time?
Very, very, very busy. It's very sudden. Obviously, you expect moves after economic figures and GDP being a quarterly one. It's a big figure. I think the initial reaction with the sell-off, obviously, vol spikes up. We had a lot of business on the downside of the US throughout the day, so I think people were expecting it to miss, but not by that much. But from reading up on it afterwards, it seems like the figure's driven quite a lot by imports and essentially stockpiling by US companies to get ahead of the tariff regimes. So I think that probably dampens fears a little bit because it seems like a sort of reaction that's caused this change this impact to the GDP calculation. But then hopefully those companies will have the stockpile to continue selling, and also the drivers like consumption and investment have stayed quite strong through the figure. So I think obviously the earnings in the second half have helped driven it up in that late rally, but also a sort of measure into the response, realizing why that GDP is low and that hopefully it doesn't mean a recession's come in with the next quarterly report.
Yeah, which is why I kind of never really kind of bought into like, oh, is this the end of American exceptionalism? I think those people saying that, it just sounded a bit extreme. Alongside the recovery in US stocks on Wednesday. Boston Frank, good morning to you. Boston Frank also coming online and talking about the US NASDAQ futures, of course, up, as you say. Microsoft and Meta gave that big lift up to the US late session overnight. I have to say it was quite an exciting roller coaster ride there as you saw that green candle shoot up. Treasury is also outperforming their global peers on sovereign debt markets at the moment. Are we kind of in the eye of the storm, Jack, or is this going to be something that will change from day to day, or are we kind of seeing some sort of muted week potentially ahead, as Elliot was saying, but could we be on the precipice of it all going a bit crazy again?
I think there's definitely a potential for it. It's every time I come on the show, I try and say something about the outlook for the next 2 weeks, and it changes completely week to week. I think we're still going to get moves on news coming through, but everything is so dependent on the tariffs that I think that 90-day pause is going to be the sort of headline expectation.
I think it's July 4th, isn't it?
Really?
Yeah.
Oh, wow.
I believe it is July 4th. If my calculation serves me right, Trader friends, please let me know. But yeah, the end of the 90 days, I think, is on July 4th. And I think they've purposely picked Independence Day. Wow.
Liberation Day and Independence Day.
Yeah.
2 highlights on the calendar.
Speaking of dates, von der Leyen and Trump and gang potentially meeting if all things go ahead. Thanks, Monkey Man. Monkey Man saying thumbs up. So I think I've got that. I think that's for it is July 4th. But the key date next week, von der Leyen and gang, von der Leyen and the US negotiators meeting next week to talk about whether or not they can come to the table and get a trade deal. A lot still is at stake, of course, on both sides. It's going to be very, very tricky because the Europeans have made moon music saying that a deal will only be made when it is right for the Europeans. Of course, Trump loves tariffs, and so there was a point of complete silence, complete deadlock between the two sides. And I think before their encounter at the Vatican, von der Leyen had not spoken with Trump since his return to the White House. So that tells you, gives you a sense of the relationship over there. Taking a look at some of the other chats as well. Steve Davis saying some of the vintage clothes, picking up on your comments, Jack, which you talked about earlier, still have tags on, never been worn. Is this true?
Yeah, there's some of them. There's different.
Why hasn't
There's
anyone told me
different
about
sort
this?
of levels of how well kept they are. So some of them are brand new, or at least they say they're brand new. Don't know if I've not really looked into it. They could be fakes, but then other ones are a little bit worn down, and obviously the price changes. The best thing about it though is you bid for it. So they could set a price of 25, but you could offer them 20.
Right.
So you can have a little bidding war with it, and every single time you bid for it. So it gets quite petty when something might be £4 and you bid £3, just trying to get that extra pound off.
Is it a bit like eBay where the actual sale just comes in the final 2 seconds?
Kind of, but so you could buy it straight away, like on eBay, just for a set price, but then you can just keep bidding lower levels, but then you don't go into a bidding war, you just send it to the seller and they can reject it or counter offer, basically.
Yeah. Some key dates as well from R. Saxena saying Berkshire's annual meeting is over at the weekend. Yes, that is. Thank you so much for reminding us. That is a key event, and it'll be interesting to see whether Berkshire Hathaway and Buffett and Co, the Sage of Omaha, has a tinker with or says anything about how they're going to change their portfolio. Berkshire Hathaway and also Buffett, if you remember, and the last time I think they added Domino's and pools, Domino's pizza. We were all that tickled us a bit here, and I had my first Domino's ever because no one could believe I'd never had a Domino's pizza. Ever. Might be my last, I have to say. It was after Rich used the Domino's pizza to explain PE ratios. So he probably talked over it a lot, and it was cold. So, but yeah, Berkshire Hathaway over this weekend, and also the other key date as well is that we are expecting sometime next week, alongside these talks between the US and EU negotiators, more companies to kind of come out and say, look, we're going to have to pass on these costs now, and this is how much it's going to cost in terms of the customers, in terms of passing on these tariff costs. Bigger B is saying US dollar is weak as well. It is. So let's have a look on the forex side of things, punching up the US dollar basket here for you. And as you can see here, we are traversing near that 9958 figure. It has come off, it has to be said, it has come off the lows of mid-April and also bumped off that resistance point seen 17th September. Beg your pardon, that dotty line, that perforated line should be a bit higher, but I was drawing it in a great deal of hurry that day. But it is still at its lows compared to the beginning of January. Of course, that also, as Bigger Beers rightly says, makes US products attractive. I am a firm believer that Trump is enacting the weaker dollar at the beginning of his 4 years, right, Jack?
Yeah.
And then in his fourth year in the presidential cycle, in the countdown to the next election, that's when we're going to see a stronger dollar. Right, Jack, just some final words really quickly. Crude, because we've had quite a bit of that, and the vol outlook on that front.
Crude's been very interesting. The volatility space, it feels like it's exploded on it recently. We had a massive move down, or a sharp move down, should I say, yesterday. It seems like we had inventory figures, but also the sentiment around crude's been very poor and signaling a down move continuously. We've got on our daily the sort of straddle, which we use as a guess at what you'd expect, or what movement you'd expect from the market during the day. That's 124 points on crude at the moment at the money. So it's implying over a 2% move again, and the weighting and skew is definitely to the downside. The same thing's being seen on weekly contracts and monthly contracts. So very much implying a down move on crude. It looks like the drivers really are sort of demand. The US and China trade wars really feeding into that narrative. So any change on that narrative could maybe relax the skew, but also we're seeing Saudi Arabia coming out and saying they're unwilling to prop up gold prices, and OPEC mirroring that. So it looks like we're going to see crude prices coming down, and it looks like that trend likely to continue for a couple of months, I'd say.
In your mind, Jack, just really quickly, how much is that down to demand, the demand picture, and how much is that down to that report that Saudi Arabia has briefed their allies, saying that they can sit on prolonged weak prices?
I think it looks like the demand is probably playing a bigger role at the moment, particularly Chinese demand. So obviously the trade war's playing into that quite a lot. Any crude that they would buy in from the US is probably going to get tariffed, although I'd expect, if it's not come already, an exemption to be made, or at least a lowering in energy. But it looks like Chinese demand is going to be the biggest driver. I think the OPEC story is more of a little bit of an insecurity, because then people don't know how far it could fall, because there's no willingness to prop that price back up with supply cuts.
Right, we got to leave it there, Jack. Thank you so much, Jack, on oil volatility and also market volatility, key dates, Warren Buffett, and also that US-EU talks in the coming week. Thanks, Jack. We got, don't go away, everyone, because we've got Chris Beecham coming up next with a macro view.
Cheers,
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction. Whether prices are rising, falling, or staying flat, there's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Hey, trader friends, welcome to All Sessions, where we track the US stocks that you can trade right now on the IG platform. And we're going to do it with Ben, freshly back from Mallorca. Welcome.
Thank you very much.
back.
I'm looking good. Chris Beecham's never looked so good, hasn't he?
Yeah, sorry, well, you look really tanned. Yeah, we've got an upgrade here, people. We've got an upgrade. Let's have a look at the options right now, because I hear NVIDIA in my ear moving quite rapidly there. Let's have a look at the winners first.
Yeah, we're solid. Obviously, Meta's news last night. Great start in the pre-market, up 6%. Reddit, interestingly, 4.5%. Snowflake, 3.9%. NVIDIA, 3.7 move up at nearly,
Broadcom as well.
113. Plug Power, which I think Piers was talking about earlier, Broadcom. So very much that sort of tech AI sector, all driving higher. Hardware companies as well, Dell,
quantum
Micron.
computing also giving markets a bit of a, the all sessions a bit of lift. IonQ there up almost 2.6%. But I hear in my ear, did you say, Producer Phil, that Apple is on its way down? Apple is down. Take us through the biggest losers first.
Well, yeah, they're Qualcomm down 5.36%, so that's a big one. Obviously, the short QQQ, VIX short-term silver as well, so makes sense, cyclical move out of those ETFs. Best Buy retailer down 1.1%. Exxon, interestingly, they're down 0.25%, but obviously weaker oil. eBay, Home Depot, Barrick Gold. So these cyclical names, Coca-Cola, basically, if we've been repositioning probably out of sort of that tech AI, moving into some more household sort of like defensive names, moving out of those. But small moves, really. Obviously, the main moves on the upside, apart from that Qualcomm.
Yeah, I mean, that's down to that soft revenue forecast, right? But it does, stand out amongst the mostly
Very positive.
tech bid up positive.
Yeah, absolutely.
Big moves on the markets. I was up, which is why I probably look a bit worse for wear watching the Microsoft and Meta. But boy, was it exciting!
Yeah. I didn't stay up. I'm not quite as committed as you, and I have small children that wake up in the middle of the night. But no, I followed it this morning. Obviously, Microsoft numbers driven again by Azure and the cloud. Really. 20% outperformance in that area, which we've seen over the last 2 to 3 quarters has pretty much been driving Microsoft's success. So again, interesting. Obviously now with those news, basically, do you trade it as a 3-month forecast into the next figures? Because obviously with all the tariff reaction, we're not seeing this in these numbers now.
No.
So it's going to be June, the next 3 months as to where we're actually going to see the lingering effect of that. But do you trade it now on a 3-month contract just out to there to have a view?
Yeah.
But yeah, no, really strong.
We're definitely in the sweet spot period, and I think that this will be a very different conversation when the next set of results come out.
Yeah, I mean, I know I sound like a broken record, and I've listened to the guys this morning on the show, but unfortunately, you basically are just at the perils of the news and what Donald's saying. So trying to take a long-term view is tricky, but at this moment in time, it's almost like week to week shifting. So last week we're out of tech, we're out of AI. This week we're back in tech, we're back in AI. We were out of US stocks, we moved into European and UK names. Right, we're going back into US. So it's a very fluid market to be involved in. Great if you're trading short term, but to have a longer term view at the moment, it is much more difficult.
Yeah, that's right. And I have to say, this is the first time in my entire career that I'm seeing more and more people saying they just take everything off the table on Friday.
Yeah.
And then whack it back on Monday, early on Monday.
Yeah, and I would probably say it's a wise move. Like, why run weekend gap risk when Donald can just say something on a Sunday night, markets are down 5%, up 5%, whichever way. Like, these are not sort of normal conditions. Like, it's been even more prevalent than his first term as to sort of how much of an influence he's having on the global scale, really. So I think that makes sense. We've seen gap risk over the last month, and as a company, we've been adjusting our margins on the back of that just as a measure. So it makes sense for clients to be doing it outright themselves as well.
Yeah. I would say if you're trading Microsoft, trader friends out there, bear in mind that I've got this yellow line there for you. Bear in mind that there are potential bag holders at that level, and just make sure you are kind of aware of those levels, because like Ben rightly said, we could have a reversal depending on what Trump says at that particular moment. And we've got, of course, that meeting between US negotiators and the EU next week. We've also got that impending July 4th end of the pause.
Yeah, I mean, look, that 90 days has just bought the market time, really. But it's what's coming out in between. So obviously the China trade war is still ongoing. I know, like Jack said earlier, there's no actual sort of material change in terms of actually something coming out that's changed. So we're all still just basically trading on this softening from Trump behind the scenes, but there's nothing on the front end to say that anything's changed. But clearly, GDP figures yesterday don't help, but that's all just sort of, I think, part and parcel of the way he's approached it. He knew it would have some effect, but it's just if the people around him can sort of tame him down a bit.
Can you imagine trying to tell Donald Trump no?
Oh,
I'd love to be a fly on the wall when if that happens. Speaking of which, what has changed though, Ben, is the whole CapEx view. So I think if you were, well, you're probably still in Mallorca yesterday, but if you were here, Piers and I were talking, I said on air that I was really worried about CapEx and that tailing off. So the hyperscalers, all the big tech, there's been a huge amount of CapEx, right? And the concern was when this started to fall away, or there was any sign that this was going to fall away, then there would be an issue or a squeeze, because all the spending trickles down. However, when we saw the earnings yesterday, I was first of all on Microsoft pleased to note that Azure and other cloud services, I banged on about it's a cloud, watch that number. Revenue grew 33% in constant currency. This was a beat, and they beat on every print. And this was also a really healthy number compared to what it did before, which kind of like the figure that they had prior to that was caused concern that maybe it wouldn't be as strong as now, because we all know that Azure and other cloud services is at that maturity phase. But CapEx continued to be strong. I mean, it was incredible, which kind of leads me to think, actually, in the tech space at least, the party is still ongoing.
Well, I mean, we've had two results, and they've outperformed. So Microsoft's done well, Meta's done well. Obviously, Apple and Amazon this evening. Obviously, the last earnings, the Mag 7 was mixed. So far, we've started positively. If the read across is that there's a constant and that everyone's outperforming where they anticipated, then yes, we'll obviously see that people coming back into those names again. We've obviously Nvidia's been hit very hard over the last 3 months, but basically they've started to edge higher again. So if we are seeing good earnings for this quarter, that's what I was getting at in terms of basically the tariff chat isn't going to filter through to the company's earnings till next quarter. So you've almost got a 3-month window basically to say, right, well, actually I think there's growth here, and then readjust, or it may go again, but you're basically going to have to reevaluate at that moment in time as to what sort of where the numbers are and what's coming out. And also you've still got the July 4th. But by the shape and looks of everything that's been discussed in the numbers last night, it looks positive. So tonight's a big one, obviously. If we have double day yesterday, double day today, all positive, then that is hugely going to drive this market again. And
it's all about the expectation, isn't it?
Yeah.
We start off on a good positive note, and we have so far with the text, and it's likely to continue.
it's just sentiment, isn't it? Like, these names are so household throughout massive institution investors, retail, everyone. Like, if the sentiment is positive, then it doesn't take much to drive these names again back to nearly where we were all-time highs only 4 or 5 months ago. So I think it's kind of like there could be a great opportunity if it is all positive, but it's only going to be for a period of time till the tariff chat comes around July 4th or the next earnings season in 3 to 6 months' time, when basically we're going to have that effect of what the tariffs may have had an impact on supply chains, etc. So yeah, I think
I like that. I like that view, and I like the fact that you mentioned Nvidia too, because I took off half my holdings in October, but now can you see that it's poking, the price action is poking its head quite close to that 113 support level, which I've put there to remind myself. So, trader friends, tell me whether I should start building another position there. Right, some comments on the chat there. Talking about oil, Jesse 14, morning to you, saying weaker US dollar historically means a higher oil price. Correct. Not sure why it's not happening this time around. Well, it's to do with the whole demand side of things, right? Jack was talking about this earlier, and at the moment the mood music is skewed to the demand side. So if we don't see, for example, mood music out of China saying that they need more oil, more energy, this has more weight than the whole skew towards the US dollar driving the direction of oil, if that makes sense.
Yep.
So it's all about weighting. We talk about weighting a lot here as analysts, because it's important to understand which mood music is driving that market at that point. And also, Bigger B is responding to Jesse. Don't use any of it, it's all exported, plus much of the natural gas that comes with it. And he follows with close to 10% from Mexico. This is a good point, because in Malaysia, which produces first grade oil, and their sovereign, obviously their government-backed oil firm is Petronas. On the Formula One cars, Lewis Hamilton, all.
I was Petronas, not Petrobas.
Petronas.
Oh, okay.
That's another
Yeah.
government-backed. Yeah, and they export almost, a significant amount of the premium grade, high grade oil. And then they import the cheaper stuff.
Yeah, solid business model.
Yeah, and
Sell
stick
high,
it
buy cheap, yeah.
Yeah, stick it into the expensive cleaner fuel buses that they've bought, and it kills their
Recycle it.
engines.
Oh,
And it
really?
kills their engines. It's crazy.
Ah, right, okay.
Yeah, we've got non-farms as well. This, it's
Yeah.
it's a big week
Right,
amongst.
yeah,
all that.
lots of data. Obviously, GDP figures yesterday.
Yeah.
Got mortgage rates out of UK today.
Yeah.
Non-farms tomorrow.
RSAX, you trading that one? I know RSAX is really has got a keen eye on the macro front there.
Yeah, I mean, non-farms, obviously historically huge numbers, but we just tend to see a lot of volatility and a filter back round to where they were around pre the market number. But obviously, with the pressure on the Fed at the moment and Powell and that sort of side of things in terms of rates, so we'll see the numbers on there in the labour market. Obviously, weaker labour market probably helping them to be able to cut. So yeah.
Amazing stuff, right? We will be back with more on non-farms and all of that, and oil as well, with Chris Beecham after this.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Hey, welcome to Trade Expectations. Chris Beecham. How are you? How are you? Did you manage to get some of the sunshine yesterday?
Yes, I did. And this morning. And then I was up this morning singing early with the lark. And it was a lovely May Day. And the loveliest May Day I've seen in a while, actually. Really beautiful day.
I saw the pictures. I mean, all those flowers in the hats was impressive.
But it's our local version of what they do in Oxford, where the choir sings up the tower and everyone comes to watch. It's really hard to make yourself heard when you're singing up a tower, and then because the sound, odd enough, the further away you are, people at the station can hear us singing, but if you're right underneath the tower, you can't hear us because of the way the sound doesn't travel that way.
Am I imagining this, or there are instances where there have been choirs that sing, by the sea during this day as well, and it's not just on a tower? I don't
know about by the sea, but it's usually just up the tower. I think there's a couple of other places do it on Ascension Day as well, which is later in the month.
Right. Wow.
Yeah.
Well, good to have you. Good that you came back from the tower to be with us because, of course, tomorrow, big day. We've got the non-farm payrolls. 185,000 is what is expected, I believe. What is your expectation? You are looking for a stronger or weaker number after that GDP number that was quite interesting yesterday.
Yes, GDP was interesting. ADP, of course, was a shocker. It got lost in the noise around GDP. But then again, you can have that debate about whether ADP is relevant at all. And because the different methodologies from the ADP report to the payrolls report that we get tomorrow, there's not usually that much of an indication. Some months they do sort of align nicely and you can get a read from ADP on what it should be, but often it is completely the direction. So don't read too much into yesterday's ADP miss. I think with GDP as well, the thing about GDP, of course, was the calculation with the huge surge in imports. The biggest surge in imports in the US since 1975. It was even bigger than in COVID, or the post-COVID world. So actually huge surge in imports, people front running. And because imports is deducted from GDP, whereas exports are added to it, that meant that you had a negative number. If you'd taken those import figures out, and I don't mean to be one of those data mining types that says if you take out the number I don't like, you get the number I do like. But if you take out the number, the imports figure, GDP remained very, very strong in the US. So there's no sign as yet of a recession, and wages are continuing to grow. Yes, and maybe there's sign of some stagnation in the jobs market, but it's not really coming through in the sort of the headline data at the moment. So we shouldn't really be on full-blown watch for a non-farm payroll shocker tomorrow, I think. And you shouldn't read too much. And I think the problem is the market's maybe a little bit sensitive. And of course, you've had this huge rally in stocks from the lows. We can talk about that in a second. But so they are maybe vulnerable to a slightly weak piece of data. But even if you miss payrolls by 20, 30K, it's a tiny fraction of the US workforce, and even tinier fraction, of course, of the US population. So it's important not to overstate the moves, both on the upside and the downside here, in terms of misses and beats of expectation.
All you trader friends out there, let us know if you traded that figure. The other thing that was sort of hidden, if you like, amongst that noise as well, was the jolts. I was watching this, and actually it also gave a sort of calming picture, because, you know, the hiring rate remains steady at 3.5%. I think that was expected. Also, it was the levels of hiring that I was looking to see as well, and it increased by a modest, I think 41K was the figure.
Yeah, and this is the thing about US data at the moment. It's just not signaling recession, particularly. I think because not yet. That might change, but you've had, obviously, the impact of tariffs has yet to be felt. Particularly, the earliest thing we can see is in the shipping data and the way people have been front running massively, and then we're expecting it to drop off a bit. But it's not showing up in the main US data yet, because you had this huge crash in stocks. It was kind of viewed as that is signaling that a recession. This is the market getting ahead and getting its moves in now, and we expect further losses. But if data continues to come in at least okay, and if not better, then I think the market may well continue to surprise to the upside. That's the short-term view. I'm not suggesting that we've definitively seen the low for the year, but I think people continue to sort of, even yesterday with the GDP, you had that initial drop in stocks, and then it recovered, almost as if the market then worked out the actual meaning of the print and then rallied, helped along by Microsoft and Meta earnings. So if you get strong numbers from them tonight as well, you have got room for further upside. And this is the thing about these bear market rallies. They can be much more dramatic and much more extended than people realize. Yes, the Nasdaq is up some nigh on 2,500 points from its April low. But then if you continue to get good numbers, and generally markets tend to drift higher absent anything else, all the other things being equal, it tends to drift higher. And if tariff headlines stay out the news, and if Navarro and Lotnick help us off TV, then you might get a further drift higher. So I think this is where you have to remember that markets may well just continue to confound expectations by rebounding even more than they have done. And then, as I've said before, it's when we get into the proper wave of May, June data, Q2 earnings that start in June as well.
So
that's when we'll get a better view.
Chris, how do traders look at this? Because well-known investor Kevin O'Leary, saying that these recession fears likely to be over-exaggerated. The fact that we've been talking about this R word, it's been looming, but never then materialized. On the other hand, we've got the JP Morgans, the Goldman Sachs, the heavy hitters in that space, all saying that they are very concerned about the R word in 2025. So how do you square this?
Well, this is the thing, is you've got JP Diamond this week or last week saying the best case outcome for the US economy is a shallow recession at this point. The problem for trade, let's talk about for investors first, is you have to take the longer term view, and you have to argue that even if you are due another big leg lower in US stocks, the likelihood is the 3 to 5 year view remains that they will rebound and continue and will recover and rally, and you might get a better opportunity later in the year, but if you're sort of dollar cost averaging, pound cost averaging, buying a certain amount every month, you're just drip feeding it in and you're writing it down. If you're trading it, the price is your only indicator here. You can tie yourself in knots, looking at GDP, looking at national jobless claims, looking for signs of weakness, that the price will be your main indicator. At the moment, it's not going down. It had obviously had a sell-off in March and April. It's continued to rebound. Yesterday might have been the trigger for the next leg lower. I think that's how a lot of people saw the immediate aftermath of that GDP print. But it was rapidly turned around. And buyers continue to step in. And they just continue to be prepared to buy on weakness. Now, you can argue that US stocks are too expensive. They're pricing in too much good news. That's a fair point to make. But if you're trading this, there's no point blindly trying to call the turn here and saying just because the NASDAQ is nigh on 20K, the NASDAQ 100 is 20K again, or almost today, it's time to sell. It might be. And if people drag out the sell in May thing, I will just go spare because I can't bear it. But May is often a positive month. It's not always the sort of negative month of people's imagination. You often get a continued rally in May. So there's an argument to say that absent any bad news, absent Trump coming out and talking more about tariffs, or if you get a few positive noises on trade deals, I can see this continuing to drift higher. At least into May and potentially the beginning of June. And that's if you're trading it, that's the way it is. Look at oil prices. They're down massively again the last few days. Saudi Arabia saying they're essentially preparing the market for further declines in prices. And that will also cushion stocks to an extent, I think, because inflation will continue to decline.
Just
so
whacking
that's
up
how we're viewing it at the moment.
WTI here as we speak, maturing. That's right. WTI and Brent normally tango together, and we are seeing this continued fall in prices there. WTI at the $57 a barrel handle, and we are seeing a continued push lower. If you look at 1, 2, 3, 4, 5, so really good run, or rather, depending on which way you're trading this, of red candles there. And we saw that reaction because of the report about the Saudis issuing comments suggesting that they could sit on prolonged lower prices for longer.
Yeah, and they're prepared to weather this storm. So that is, and we thought this would be the case. The likelihood is not that OPEC and others would club together and really keep a tight lid on production to maintain the price. In times like this, cooperation tends to fall apart, and they move into keeping market share by producing more, and that's Saudis most obviously, and that means you expect further decline for crude oil. It's moved in one direction this week, and again, this is the problem with these very volatile markets. Sometimes if you can get an entry point, you have to use wide stops, and your position size isn't as large as you'd like it to be. So therefore, you probably don't. If you are on the right of the trade, you're not making perhaps as much as you'd want to do because you've got a much smaller position size. But you just obviously have to account for this volatility. We've gone from almost $65 on crude a couple of weeks ago to 57 now, with no sign of it stopping as yet. And if these headlines continue, and if the production data, we already lived in a world where supply was outstripping demand. So if the production data continues to show that, you can argue for a retest of those April lows in WTI and Brent, and potentially even further.
That's right. And back further than that, then we're kind of looking at lows that were seen in March 2021, which brings me nicely to these projections, which I really can't get my head around because I think they're over optimistic. EIA projecting that WTI will average around 70 at 31 a barrel.
Right.
In 2025, and Citi has revised their forecast, but I still think it's a touch higher. They've revised their forecast to 63, but that's still kind of, that's still manageable there. And UBS lowered their Brent forecast. Let's have a look at Brent here. Where are we? There we are. Brent here. UBS saying they expect Brent to, on average, to be at around 80. So,
okay, fair enough.
I still think that's a touch high, don't you, Chris?
It is really, and that's the thing.
Given everything that's going on at the moment.
Given everything, and we talked about this with Rich earlier in the week, is we haven't yet gone to the silly season for oil predictions, which is usually a sign that it's reached a temporary low. When Goldman starts coming out and saying it's going to $20, then we start to think that maybe crude oil starts to turn higher from
Jesse,
here. But really,
Yeah, Jesse14 saying, well, whilst we're on the topic of oil, anyone able to explain how overnight funding rates are calculated by IG? I will check this out for you, Jesse, after this show. I know exactly who to look for, and they sit opposite Jack, and Elliot, so I'll find out for you. Email me, and those of you watching, like and subscribe. We really need, we're putting a call out for more like and subscribes, because it means that we will then get hopefully sponsorship from the LSE. Anyone from the LSE, they're able to give a good word, or the SIBO or the New York Stock Exchange, because we would like a proper Trade Live with IG bell there. Monkey Man saying, I feel a pull on the price of oil coming on. We should have a poll as to what are we going to do on WTI or Brent, people? Shall we do WTI as to where oil will end this year? Chris, have you got a figure in mind before we head off to the next segment?
Sorry, what was that? I was trying to find the funding charge. I do apologise.
Oh, if you can find the funding charge, it'd be great for Jesse.
In the chat. I've put the link in the chat there for you.
Okay, we will share that with Jesse.
I'm not talking about Queen Victoria's drug addiction this week. It's me providing useful information.
Queen Victoria, Queen Anne, the one with the comfort rabbits, or without?
No, that was Queen Anne. Queen Victoria was the one that used to have a daily dose of substance, shall we say? Sorry, you want to talk about oil? Let's talk about oil.
Yeah, let's talk about oil. But have you got a range in mind for where we might be end of this year?
Make a prediction but never put a time frame on it. I can see it going to 50, I think, over the course of the year if the data worsens. I think there's a lot of pressure on crude. I think demand forecasting coming down, we could be 50 further. So great for consumers and, of course, drivers.
I am bearish as well. I'm thinking 60 oil prices, WTI, where will it be end of this year? Yeah. Where will it end, says producer Phil. For Monkey Man saying 48 for me. Wow. He's lowballed you, Chris.
Okay. Fair enough.
My prediction for 60 is just purely because it's not too low that the oil producing nations are going to really kick up a fuss. How about 50 itself? I think that's already dominated. I think Chris called 50, didn't you? Yeah.
Yeah, I went with 50.
Yeah.
So you're not allowed to go
So
50.
Jesse, have you got a figure for oil? We'll get you that link quite soon. There we are. He's got. Yeah, here's the link there on the chat, Jesse14. Never let it be said that we don't put our customers first here at Trade Live with IG. And here is the poll. Where will crude oil end at the end of this year? And on that note, is the Q&A up next, producer Phil? Oh, yes. So we are going to talk more about that, and we're going to cover all your Clever Clogs questions here on that Q&A. Chris Beecham, have a good rest of the day. And I have noted your oil and Monkey Man's as well prediction, and I will report back. I will keep this live until the end of this year, and I'll report back on who won.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There are too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content. Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well
Hey, welcome back. And this is the live Q&A session with producer Phil.
Hello, everyone.
Hey.
How are you, Ange?
I am very good indeed. I tried your chia thing yesterday.
Yes.
And
Didn't
I
like
thought,
it.
what makes this Scottish man so handsome and muscly?
It's chia seeds.
What are they? I tried it. I had an open mind, and I have to say, I liked the taste. It had blueberries on top.
Yeah.
But there was this kind of aftertaste. Do you have?
But that's why you get it homemade and you make it yourself.
Okay.
Sorry, prep. It's not very nice.
I didn't buy a prep one. I actually went to Latch, which is like a super posh. It was like so expensive. One small bowl.
It's not worth it.
It was
Oats and chia seeds.
£5.
Oh,
But it had this lingering smell of chia seeds the whole day. Is that a thing? Is that normal?
No.
Okay.
No.
Right. So we had a poll earlier.
We did have a poll earlier.
Where will crude oil end?
Well, I've ended the poll. We've got above 50, half of you said that. Under 50, 29% said that. Only time will tell. That's my diplomatic way of saying I don't know myself. And 50 itself is what Chris Beecham said, and 4% of you said that. So, yeah. So that's the poll. We've got a live Q&A, so if you do want questions asked by Ange or Rich in my ear, when we can get them answered. But there's something I want to show everyone the other day that happened. I got mugged off live on air.
No.
And I wasn't really happy about it. And I wanted to show Rich this live on air, but he's too scared to come on. So if you guys are ready, do you want to play the VT and we'll see what happened on Tuesday?
Right, producer Phil. The core PCE always comes out at 1:30 p.m. Producer Phil is now arguing that the core PCE is at 3 p.m. The core PCE has never been at 3 p.m. in its existence, producer Phil. If I promise you that the PCE inflation is at 1:30, and I will bet my life on it. No, you're not right, producer Phil. You're just right that Trading Economics calendar has
Blames the website.
Oh.
I'm just looking this up now, and I'm searching core PCE, and Nick Timireas of the Wall Street Journal, who's known as the Fed Whisperer, he says the PCE price index bracket's due at 10 a.m. on Wednesday. So I think they might have moved it. The plot thickens, as they say.
I'm lost for words.
There we go. Live mugging off. Oh, there he is.
Yay.
Oh, there's the coffee. Oh, lovely.
But you
right.
said your life,
your life.
Your life.
Milk and one's normal milk. I'm not sure where.
Oh, fantastic.
Oh, you know, we all suffer, not him, right? If he has dairy.
Yes. No comment at all. So yeah, that was it. That what happens. And I'm just glad that he's. Whoa, here we go. Sort of a lunch as well. I thought was better. Was his life.
Yes.
How do I get someone's
his
life?
Life, like I clearly heard life.
If I need plasma.
Yeah.
Or if I need stem
Liver,
cells,
spleen,
then I can rely on Rich
spleen.
McDonald.
Yeah. Yeah.
Kidneys, whatever I need, I've got Rich McDonald's life.
If you like and subscribe, hit that subscribe button right now, because that was a sight to behold. We were out there crapping ourselves, and the whole thing was going on. So the back to oil. That the poll.
Yes.
So someone also.
I'm scared to have this now.
iDog. Are you smelling it to see whether it's oat or dairy? Trader friends are very handsome and muscly and strong. Producer Phil is dairy intolerant, which is why I said, and why Rich said, one has got dairy, one has got oats, and he doesn't know which.
I blame my parents. Terrible DNA.
If I had to guess, I wouldn't have picked you out of a lineup. Anyone here dairy intolerant? I wouldn't have picked you. I mean, Scotland's got Ayrshire cows, you know.
We do.
Yeah.
And I can't touch them.
Keep your regular. Boy, see, talking about your chia seeds. Monkey Man saying you should add walnuts with your blueberries.
I did this morning.
Yeah.
They're blended up.
But I felt like chia seeds all morning. Right, back to the questions. Oil. Someone messaged to say, Ange, why did you pick 60?
Yes. Why did you pick 60, Ange? I want to know.
Because, like, if you scroll up the chat, like, Derek has a good point as well. So, Derek, good morning to you, Derek. Where are you from? You sound like you have experience in the oil sector, saying under 55, US fracking not viable. That is correct. I also chose a figure that the oil-producing nations would be happy with. Yes, because it's a two-way thing. The US don't want some of the biggest arms buyers to be upset.
Okay.
Because if some of the world's biggest arms buyers are upset, then they don't get to sell all their stuff to them. Okay, so there is a balance there, and the magic word for this, look it up, trader friends, you're going to look this up, is the fiscal break-even oil price. So especially in the Middle East, we have pay a lot of attention when trading oil to this fiscal break-even price. What does this mean? This means that it's a fiscally stable, okay, we're satisfied with this kind of price. And it kind of generates a sort of space where they're not having issues in their own domestic markets, right? So for different countries, you have a different range. Saudi Arabia, it could be around 80. Kuwait, 65. Some places it can be lower, it can be higher, but kind of like 60-ish is kind of like the sweet spot. What happens, you ask, if we fall below this break-even price? Well, you start getting governments that produce oil running into deficits, and they do not like that. You start having pressure within OPEC Plus, to cut production, to start to try and support the price, right? Because they have to get their books to balance. So that is why I chose 60.
Sure. Okay. Lovely. All right. Let's get to some questions. If you have any questions, then whack them in the chats. We'll do as many as we can. So first question of the day was one that I saw at the Ask IG email. So it was from someone called Bilhar. Have we got the graphic up, guys? We're not ready for that? That's okay. I'll read it out loud whilst we're doing that. From Bilhar, he's speaking of copper as well, because copper's been the topic of the day the last couple of days. I'm new to trading copper and would like your input as to what this correlates to. What does copper correlate to, Ange, in the markets?
Copper is a real kind of, you really need to pay attention to the dollar.
Yeah.
And you also need to pay attention to oil, because it tends to kind of correlate to that. Copper has been interesting recently because let's have a look at high-grade copper, punching that up for you, Bilhar. Interesting name, Bilhar S. Dillon. We have been seeing high-grade copper there, a lot of volatility, but we are currently seeing this downward momentum there on the most recent price action, if you go to the right there. And copper, as you heard us speak earlier in the show, if you're looking to trade this, just bear in mind that we've seen high volatility, and also the price action could be about to turn. So you heard me earlier this week saying that it's interesting that we had that big drop in the previous session, down more than 4%, but pay special attention to the supply side of things, trader friends, because for example, we've got Shanghai, and they have indicated that supply squeeze is in play at the moment. We'll take a look at warehouse stocks as well for copper, and that also indicates a supply squeeze at this point. But Bilhar, of course, all this could change in a heartbeat depending on where the global economy goes, because this is being driven by tariffs and weak demand outlook at the moment and concerns over that. Because if we don't have the biggest consumers, i.e. China, buying and having their economy grow so they need more copper, we could be in for further downside for copper.
Lovely. Thank you very, very much. And this is from... How did your technical analysis camp go?
Terribly.
Oh.
I used all 3 hours, in fact, more, 3.5 hours, and I wrote like there was no tomorrow. But I've been told and given a lot of heads up that it's very difficult. Level 2 is very difficult. And I did see an 80% drop-off of number of people taking the level from the level 2 exam from the part 1 exam.
Oh.
And then I was like sitting there after 2 hours had elapsed, right? Eating Snickers bars, having a big flask. Thanks, Rich, for the heads up. I forgot. You said make sure you bring something to eat. I had a big...
How long is the exam?
Flask, 3 hours. But you have to log in 30 minutes before because they need to check that your 2 cameras are working.
You're not cheating.
Yeah, they need to make sure that you're not sort of, doing something that you shouldn't be doing. Axel hiding behind my chair.
Got an earpiece, Axel in your earpiece.
Yeah, Axel in my
Being like,
ear.
"Why would you want a short
Yeah,
one?"
yeah. So.
Fair enough. Okay, lovely.
So, but I've been told it's like your driving test. Like, don't expect, because it's also like a money generator, right? Don't expect. But I gave it all that I had.
And that's all you can do. You've got to try your best.
I gave it some welly.
There we go. Right, next question is from Bigger Bees. We have, why doesn't platinum keep in step with gold on price? Are there as many industrial applications for the precious metal?
Bigger Bees! I love that you always send me questions related to PGM. Let's have a look at platinum here. Platinum. Right, here we are. Now, platinum, I haven't actually traded this recently, but spot platinum has been very, very volatile as well. And it tends to kind of do its own thing, which is why I try not to trade this as much. Platinum also, don't forget, has many uses. And it also is used in, I believe, a lot of the industrial side of things. If you're looking to trade this, Bigger Beers, there's also, of course, companies that are involved in platinum mining that could give you exposure. So Platinum Group, any of these take your fancy. Sibanye, you hear Rich and I talk about Sibanye quite a bit.
I hear you guys talk about a lot of things. Some of it goes in, some of it goes straight back out.
And spot platinum here, as you can see, you have to gird your loins when you trade this, because it's indeed very, very volatile. Not as much as natural gas. But platinum is used in many other spaces, which is why you have to be very careful. So as I mentioned earlier, we talked about the industrial side of things. So platinum is in the PGM space, so the car industry. Those of you that have heard me talk about hybrids, hydrogen fuel cells, catalytic converters. At one point, correct me if I'm wrong, Monkey Man, you might remember this because you've got a very long-standing memory. We had a point where platinum prices were so high that catalytic converters were being taken.
Lovely. Okay, fantastic. I think we should keep on gold as well, because that's obviously been something that we've looked at a lot recently. So we've got a question, next one from Cam. Gold longer term, what are your views?
I'm surprised you haven't hit the Axel button on the trend is your friend.
I can't press the buttons, I'm in here. I'm usually not, but I don't have any control.
There we go. Thank you very much. Yeah, spot gold. If you're taking a look at longer term, Cam, we are still in that big upward trajectory there. And if you look at, you speak to Elliot, and we spoke to Jack earlier on in the week, you can see that, you know, there's been a huge amount of interest still in gold. We have had this pullback in the most recent price action, but I'm just giving you the weekly chart there, trader friends, and also giving you the monthly chart there to show, you know, this long-term, you know, upward trend that many people in the gold market, don't take my word for it, but you know, take a look at research from Simon Popple, people like John Mayer out there. Call out to John Mayer from SP Angel there, saying that the greater, longer-term trend for gold is still up. I'm going to point so that there is no confusion there. The longer term arrow is still up. On a shorter term, you could, you know, trade it. If, let's say, you're an intraday or a trader that looks at weekly, you can use candles. You can use lots of stochastics. You could use, you know, banded indicators to try and trade it sort of intraday, and you can sell whenever we've kind of hit a resistance point or a new high, for example. But this market, this instrument keeps on heading higher, and I think we have more to come, given that we're only in year one of the presidential Trump 2.0 cycle. So there's a lot more uncertainty to come, right? we're also still seeing huge demand. Guess how much in terms of a percentage of gold is down to jewelry? You own any gold jewelry? Your wife owns any gold? You're in.
Yeah.
My grandfather's horrified that his granddaughter is wearing platinum.
Oh.
I was berated for that.
We did this stat the other day, didn't we? Isn't it like 5% or something like that?
No, it's about 50, but that's lower than most people think.
I just missed the zero out, so that's enough, more or less.
About 50. The rest is also down to, you know, all things industrial. Got a bit of, I don't have my iPhone. You got your phone? He's got everyone who has a smartphone or anything, gadget. You've got
Samsung.
Samsung. You've got a bit of gold in there. I'm sure most electronic goods. Now we've gone from the world of everyone's, who needs any more than one device? We are surrounded, trader friends, by screens. Phil has 2. I have about 10 screens around me. Take a look at all the gadgetry. All that's going to need more and more minute amounts of gold, but they all add up. Plus, you need gold in quantum computing. So those of you that, you know, there's so many industrial uses for gold, and this is only going to get more and more as we progress into this AI tech space.
Yes, fantastic, lovely. Next question we have from Kirky.
Please say it's an easy one because I have been given no notice of this.
For us newbies, how do you know you're looking at a squeeze rather than normal price movement? And I think this is also what Waka Waka was talking about earlier. I mean, he looks like he's in the bear's den himself. I think he lives with bears from the sounds of it.
A lot of this, Rich can probably talk to this a bit more, but we talk about the put-call ratio a lot. We talk about indicators that give us a sense of when there's what we call a heads up. So, for example, we talk about volatility. We also look at volume here. Short interest, we talk about short interest as well. Axel, I hope you're listening because I'm going to say Bollinger Bands. He gets very, very upset when anyone says Bolly.
It's because you're insulting the history of a man that created a technical indicator.
That he met.
Yeah.
Yes. Yes. And so we talk about those when we were talking about short interest, and also it really helps when you've got the volatility desk. You can march over there to say what's happening. Heads up, guys. So we look at all those.
Cheat code, isn't it?
Yeah, it's a bit of a cheat code, but you know, you've got all the others that I mentioned earlier. So use those, Kirky, and make sure you don't walk into the markets blindfolded.
Lovely.
And we got Mini Cooper first thing tomorrow morning to take us through all the market action, especially after the earnings that we're going to have later on. Apple, of course, very exciting. Are you an Apple or Android? I think you're Android.
I'm Android, I'm Samsung. I've never owned an Apple phone in my life, and I'm going to keep doing it.
Will Phil give us a smile before the end of the show? There we are.
It's not there we go.
Right, thank you very much, everyone. Please hit the like and subscribe button, and
please do.
Yeah, and help us towards our new bell and getting Phil back again.
We're going to get a new bell. I'm trying to work on getting the sponsorship going. We'll work how that goes. But yeah, lots of new things coming. New Discord is coming. People are dragging their heels. I'm trying my best, and it will come soon.
Woo!
And then, yeah, just new segments as well. We're having a content discussion today, which will be good. So hopefully some new segments coming up, new people coming in, some new regulars.
Hopefully we can talk about crypto a bit more.
We'll all find out soon. So yeah, on that note, please support the channel. Send it to your guinea pigs, your friends, your family, all the above. And
you could say guinea pigs.
Guinea pigs can subscribe. I don't choose, you know. So
yeah. Right, and big economics at 3 p.m. later today. ISM, you sure got the time right, Rich.
Yeah. If you look at the trading economics calendar and website, usually is correct, but sometimes it's not apparently. But
Right, Phil. They're about to turn the lights on for us and you know start sending the cleaners in. All right, trader friends, have a good day. Happy hunting, and make sure you have those limits and stops in place.